Everyone, welcome to the Business Law 210. Our topic today is we are going to discuss about the forms of business organization. What is actually a business organization? Based on the module that I have shared with you, we are going to discuss this in more detail about the definition, about the structures, and the topic and issue related to a business organization. The term of business organization refers to how a business is structured, and then how it refers to a commercial or industrial enterprise and the people who constitute it. Legal person is the natural person, is a real human being. People acquire the legal personhood once they are born. Example, automatically vested with human right. Juridical person is a corporation, is a business entity, organization, etc. They acquire the legal personhood once they are duly incorporated in accordance to the prevailing law, example, registered and ratified in the Ministry of Law and Human Rights, such as in Indonesia or Australia, and Accounting and Corporate Regulatory Authority or Australian Business Register or ABR in Australia. There are five main rights of juridical person. The first one is the right to common treasure, the right to own asset, property under its name, including those who can be able or you can able to transfer, to sell, purchase, lease, dispose, encumbrance, lien, pledge, etc. The second right is the right to corporate seal, the right to make and enter into contract, including to terminate and cancel contract. The third one is the right to enforce contract, the right to sue and to be sued based on contract, including to claim damages and loss and vice versa. The fourth one is the right to hire, the right to enter into deployment contract with workers, vendor, supplier, etc. And the last one is the right to self-governance, the right when you can make corporate regulations that applicable internally and to the third party you are or the company engaged with. And next one is what will be why we need to choose a form of business organization. The choice of the form of business is governed by several interrelated and interdependent factors, such as the nature of your business is the most important factors. You can also consider it when or based on the scale of operation. Example, volume of the business, whether you want to large or medium or even small business. And the size of the market area will be your consideration as well. For example, if you want to cover local business, or do you want to cover to market your product nationwide, or you want to play as an international player. You can also have a degree of control desired by the owners. The amount of the capital required for the establishment and the operation of the business will be a consideration when you decided to choose the form of your business organization. You can also consider the volume of risk and its liabilities, as well as the willingness of the owners to bear with it. There's a comparative tax liability that you can think of. The next one we are going to discuss business organization in private sectors. You can reverse this issue on page 7 on your PPT slide and module that I share with you through the early communication. The first one is that I'm going to discuss with you is the unincorporated business. This is the form of business entity that does not have a separate legal entity with its owner. Those are include sole proprietor and the partnership. And the sole proprietor is established by a single person or business owner. The business accounts is not separated from the owner's personal account. Therefore, the liability for the business shall affect the owner's personal asset or unlimited liability. The second form is the partnership, established by a group of two or more. Some partners might only inject capital and do not participate on business operation, such as silent partners, equity partners. Likewise, sole proprietors partnership has unlimited liability and does not have separate legal entity. Let's take a look one by one about the sole proprietorship that we discussed early. This is actually on page 9. This is when you consider the ownership and the management of a business are in control in one individual. The form of business should be called sole proprietorship. And the characteristic of the type of this business is when the business enterprise is owned by one single individual. Both profit and risk belong to him or to her as the owner, and the owner is also the managers, the one who operate and manage the operation. The owner is the only source of the capital in this case, and the proprietor and business enterprise are the same in the eyes of the law. The advantage of sole proprietors is the relatively easy formation. You also have a better control or prompt decision making and flexibility in operation. They're subject to fewer regulations and no subject to corporate income tax. Depends on the size of the business, and the ownership will be eligible. The owner will be eligible for the all profit. What about disadvantage of sole proprietorship? The owner has unlimited liability, difficult to raise capital, in the sense that when you want to expand the business and you want to get external or additional capital, you might need to partners with someone else rather than stick with the same structures. Business has limited life, depends on the owner. Difficult to do business beyond a certain size. Once you expand the business, you need to look for a different format or different form of a business organization. The next issue regarding the business organization is the partnership. This is established by a group or two or more, like I mentioned earlier. Some partners might only inject capital and do not participate on business operation. This is called silent partner or equity partner. Likewise, sole proprietors partnership has unlimited liability and does not have a separate legal entity. Let's take a look at the characteristic of partnership. This has two numbers of partners and maximum 20 partners. The relation between the partners is created in the form of contract. Written contract is called partnership deed. Then the firm means partners. The partners mean the firms. The profit is divided in any as ratio as agreed. No partner can sell or transfer his interest in the firm to anyone without the consent of other partner or partners. What is the advantage of partnership? You can have easy formation, larger resources, you are able to share the risk, you have a better management and flexibility of operation. Somehow you need to engage with them because of you will be able to share the knowledge and customer as well as the information. No corporate income tax with subject to fewer regulation as compared to companies. Um, what about disadvantage of partnership? There's unlimited liability. You also have limited life, difficult to raise capital, and there's potential of chance with legal dispute. Okay, next one we are going to discuss about the business organization in private sector. The form it can be incorporated business where the legal identity of the business entity is separated from its owner. The first one is private limited company or propriety limited company or LTD or PTY. A business entity that is incorporated by shareholders having its proportion of ownership represented by issued share and having its operation run by management executive that is different body from the shareholder or shareholders. Yeah. The next one is public limited company or PLC. This is similar to private limited corporation, but the main difference is on the structures of shareholders, which has to consist of public and private entity. PLC is required to be listed in the stock exchange and to be supervised by the relevant capital market authority. The next form that we are going to discuss is cooperatives. A business entity established and organized by a group of people, whereas each member has one vote. Regardless the share owns respectively, and everyone is responsible to run the business with share workload and decision. The benefit is that and then the profit is shared equally. For example, producer cooperatives and retailers cooperatives, and you can see on page 19 how the organization structures of private limited company being structured from shareholders meet the general meeting of shareholders and how the general meeting of shareholders interact with management and employee. Let's take a look at the next form of the business, which is joint ventures. On page 20, you will see the definition of it. Two or more business entities form a project together under single flag, and then they sharing the business risk and profit arising from the joint ventures, while maintain their respective legal identities. If the corporation is formalized to become joint venture corporation, then the founders are becoming shareholders. Next one is franchise. The business owner or franchisor appoints third party or franchisee in an exclusive agreement to sell its product or idea or services to the customer under its flag with share profit and business risk. The next form is limited liability partnership or LLP. The newly introduced in the UK on back in year 2000 by way of Limited Liability Partnership Act 2000. The LLP combines the concept of unlimited liability to be bestowed upon one general partner, and they keeps the other partners on limited liability. All partners have the right to manage the business directly, the commonly used for law firms and accounting firms. Now it is recognized in Singapore, India, Canada, and United States. The organization structures of public limited company was described on your PPT slide as a guideline. You can see that public shareholders meet the majority shareholders, and they share and meet as a general meeting of shareholders. And this structure is actually managed how the general meeting of shareholders can interact with the management and employee for certain issue that was described. The next one is the business organization in public sector. You can have state-owned enterprise where the shareholder structures most consist of at least one share under the name of the government or other state-owned enterprise, commonly established to provide service, goods for public interest, for example, electricity, water, etc. The second one is the municipal or regional corporation. The shareholder structure must consist of at least one shareholder under the name of the regional government or other municipal or regional corporation, commonly established to provide service or goods for public interest in certain region. For example, the MRT, the LRT project, and waste treatment, etc. The business restructuring can happen in several ways. The first one is through mergers. One business entity absorbs the other business entity, so both entities shall remain under the absorber legal entity while the latter is dissolved. The next or second one is the acquisition. One business entity or person acquires the majority or whole ownership of another business entity without changing the name or legal identity of the targeted business entity. The third one is the consolidation. This is when two or more business entities combine their legal identities together and they form a new legal entity. The next issue is actually, I'm going to share with you about the joint stock company. Oh, by the way, some of the slides regarding that we discussed with you, you can have several material outside of the PPT slide that I share with you. You can have a textbook that I share as a reference that I share with you in earlier meeting. Joint stock company is a voluntary association of people where they contribute money to carry on the business. What is actually the characteristic of a corporation here? It is considered as separate. Next one is a corporation. They consider as a separate legal entity. It comes into formation after all formalities. The management and of ownership is completely separate. The capital is raised through share, which are transferable. They can formulate or engage with the board of directors who are dealing with the operation under specific or under their own responsibility and their job or role responsibilities. The advantages of corporation is they have a limited liability of the shareholders and or promoter and can easily raise capital. They have unlimited life